Ladies and gentlemen, good morning. Now, how you should take your trade very simple. Either you're a beginner or you're a pro. But I'm talking specifically for some of us who are beginners. And a lot of asking questions, how do I go about being profitable from the market? I'm not going to dwell into detailed training, but your trading should structure around these things: trend and structure, momentum and volatility, liquidity and inefficiency, discipline, and plan. Okay, so now let's go. First of all, now there are two indicators I'm going to give to you, especially you beginner, but there are things you need to understand. What is trend and structure? Structure is what gives birth to trend. And all of these things, structure and trend, are rounding around what we call the price action. Now, trend refers to the direction towards where the market is going to per time. Now, if you look at it at a glance, it's always good you look at the larger time frame. That's what they call higher time frame, ATF, of the market. So this is Bitcoin on a daily time frame. If you look at it by structure, the Bitcoin is in an uptrend. How do I know? I can take my trend line and take from this low here, connect. Now, most time we draw trend line. So if you expect how you draw it, no problem. But I just want to connect at least 1 or 2 points together. But most importantly, it's always good I connect, what we call swings to swings. So I've connected swing to swing, so I can do this way, something like this, and something like this. Now, whichever way you want to draw your trend line, remember that it's just an imaginary line to actually propel for you to see the market in a larger perspective. Now, so trend and structure is very, very important. So trend and structure is the first thing you must identify in your market. So on a higher time frame, you want to look, is this market going up or coming down? So that's another flow. That's the first thing. So I've put a trend line there. Next thing I want to see, momentum. To what extent is it strongly going? Which is the momentum? How volatile is it going towards that direction? And it's all of those things you are drawing to see how to now find an entry to the market. Now, so if this is already identified, I've seen that this is an uptrend, a low, a high, a low, a high, a low, a high. Now this have turned this to be an internal structure. So this is a high. Now this become a low, and this is the immediate high now. So if I draw this down, all up this point, this is another low, and this is another high. So fine, you have identified a trend. Now, what you do need, most time people find difficult to identify trend. You have an indicator that will help you. Now, remember just that you want to see things done and all of that. But for me, I've seen that the market is an uptrend now on a higher time frame. But you are not going to trade on daily, but you need to identify where is the market going to. On the daily time frame, it's an uptrend up to now, still an uptrend. So there are two indicators I'm going to give to you, which is beginner friendly. Number one is the trend line to identify a trend. I'm going to tell you use 10 in 1, right? 10 in 1 moving average. So I'm going to add it. This is 10 in 1 moving average. Now the next you need to add is called MACD, right? Moving average, convergent, divergence. So these two indicators are majorly the two main indicators that you can add, okay? These are the two main indicators that you can add. So let's go. Now, I'm adding these two indicators just to help you identify, or at least to give you conflicts with what your bias was already. Say, okay, this market is an uptrend. Now, it's typically an uptrend when it's above 200 moving average. And this is a 200 moving average. Now, the momentum is strong because the momentum is measured in volume and the volatility. So the momentum is strong in the sense that the MACD as an indicator is still pointing up that we are above zero line. That's an uptrend, which is still confirmed. And of course, other factors, the histogram, right? So the histogram is showing that we are having the market still adding more volume as it were. So volume, just to know that there is presence of buyer and seller, more actively in the market. Now, so I'll put this to, so I'm going to do a little setting on it. So you're going to go to settings, All right. So I'll go to settings and I go to input and I will enable one more. And this is 50 because that's what you may be using much more. 50 moving exponential moving average. This is 200. So I probably can change this one to green, any color you want. And you go to style and then make it this one a bit thicker. You can leave the other one to just be tiny the way you want it, or it all depends on you. Now, what you've done is very simple. Now, this is not what dictates to you either you are an uptrend or downtrend. It only aids you sometimes at a glance. You can say, okay, we're still above 50 moving average, we're still above 200 moving average. For that, we're still maintaining strong uptrend. Now, so if that's identified first, now remember I just told you that this is not what may help you to enter trade, but this is just give you an idea of if the market is still maintaining an uptrend. Now, you have identified on a higher time frame that the market is an uptrend. If you go to 4 hours, it's still going to give you similar thing that the market is still what? In an uptrend, okay? If that is the case, you have, so first you need to identify trend, just like I've said earlier on, you need to identify trend. And so why do I need to identify trend? That's another question you need to ask yourself. Why do I actually need to identify trend? So that I will be aligned with where the market is going. Now it will be easy. Remember, eagle don't fly, eagle soar, and it takes leverage on the storm and then move with the storm. And that's why it can soar very high. And that's exactly what you are trying to do. Now, still looking at the momentum. Now, having momentum, your momentum indicator is already, slowing down the volume in the market, right? Even though the market is seen, moving up, all right? But on 4 hours, we're still in an uptrend. And how do you mean? Momentum is dropping, but we're still in an uptrend. Even your momentum indicator, this is MACD. Anything above the zero line of MACD is still an uptrend or a lower momentum. Okay, so this is like a pullback back to your 50 moving average. Now, 200 is still market price is still above 200 moving average, which means we're still in uptrend. Now, if you go to 1 hour, now maybe you're a day trader, you're a scalper, and all of that. But either you're a day trader or scalper, nevertheless, you must first of all ascertain, right, what is the direction of the market in the higher time frame. Just like the daily time frame, we just check and we know that, okay, the market is in an uptrend on a daily time frame. Now, if you look at it, you can see 50 moving average. You are not using it to trade actually, but it helps you to refine your market. Okay. Another thing I love in like this momentum is that MACD can give you false signal when the market is not actually trending. Okay. So because if the market is moving sideways, MACD can give you a wrong signal because it keep on pumping, painting and bringing new, what's it called? It always bringing signals for buy, sell at all time, but you have to just know what you are looking for. Now, I'm not going to teach. If you want to learn more detail about price action, liquidity concept, volumes, momentum, and all of that, there's going to be a need for you to enroll in our academy, or if you are part of our inner trading group, you can have access to some training information free. I'm not charging you for that. So, but this is just to prepare you and then to make you be in charge of your market as much as possible. But you must understand the market structure now. So say the trend, which market structure trend, then you need to understand the momentum. So right now, the market actually crosses down. So MACD actually help you to identify potential buy or sell. And then you now need to confirm with your price action if you are to buy or you are to sell. Now, so we're stopping down. So now, if you put all of this, you come in a day or anytime you want to trade, you want to find a trade. Now, here we have, because we know that this market is still an uptrend. So this was like a massive pullback. So that means this pullback was going to end at one point or the other. Now, ending at one point and still is above 200 moving average. So that's to say, this market that have pulled back now, it continuing to go up, which is the all-time high here. Now, so we're going to mark this. So if I mark this, right? If I mark this all-time high, because I know the market is going back to where it comes from, right? It has bounced here. So your own is just to find, where am I going to find an entry? Okay, so I can now hide all of these guys now. So let me just take them off so that you can have a clean chart. Okay, you can have a clean chart. So I trade support and resistance. And now you already have an idea that the market is an uptrend. And so on 1 hour time frame, I've come. So what I need to do on 1 hour time frame is to look at immediate swing high and immediate swing low. Now here, that's the highest and the lowest within the time frame and the point where you are. So marking that, for I'm going to mark this point. Okay, so you found, like, you can pick it as a zone. And how do you pick it as a zone? So I can do this, right? So let's go. Take from the wick of the candle that printed that low and then drag it out to be as a zone. And at the same time, this is the candle that printed that on 1 hour time frame, and I mark it here. Oh, sorry. So I'm going to take this. Okay, so I have this now. So then I can identify other pivot points, which are the point where market get and actually react massively. So this is a pivot point. So I could just mark this. Okay, so perhaps this is okay. And I'll step down to 15 minutes to an extent to check, are there other areas I probably want to. So you have delineate point to where you want the market. Now, so as it were now, what we mean by liquidity is this, very simple. The market, as it were, moved down massively at a point here, trending down, on 15-minute time frame. So it had a downtrend in 15-minute time frame, which will have a high, a low, a high, a low, a high, a low, right? Now, this is a high, now this is a low. But this low, this one had invalidated this, and then we have, this is the lowest. So here we have a low. Now this is lower than this. So now this market had come and pull up to invalidate this guy. So we have another journey come over here. So look at the high we actually identify on 1 hour, right? Now, so as a pivot point. So we've identified this. But you already know that this is a pullback. You are trading a pullback to meet up the high where it was. Okay. And so that's exactly what we want to do now. So maybe if you're confused, you now want to use now. So your entry market model, if you're a scalper, probably maybe 5 minutes, you can go lower than that, right? Maybe it's 5 minutes. If you look at it in your 5 minutes right now, see, this was 15-minute line. So that means your 5 minutes actually have changed dimension. I'm not going deeper, okay? I'm just doing basic. So let's look at it somewhere here, or take it from here. So this is like a counter trend line. What do I call it? A counter trend line. So this counter trend line, so remember the market has traveled down to this point and all of that. So you have two things to get validation on. How do I get this validation? Very simple. Remember, I'm not going for smart, SMC. I'm not trading. I'm not showing you SMC now. This is purely organic entry trading market. So since this is a pivot point, you probably want the market to travel down to this point at this counter trend line, especially this star. You come back here now, maybe a week, then I want to be looking for a buy. And then remember, this is the all-time high you want the market to actually travel to, right? Then another thing is that it can come back here, rather than now bouncing up, will now crash and come below this price. That means you want to return back to this point to actually sweep all of this liquidity, and then you can now find an entry. So you don't jump in at the market just because you saw that the market is moving. And that's exactly here. Now, if you enable, let's enable your indicator, which should just help you identify momentum. And another thing can help you to identify divergence, right? Divergence, that's a distraction or a conflicting, right? A conflict movement of the market price. So let's go this way. So let's look at this momentum indicator, which is MACD. By and large, MACD is still above 50, still above zero line, which means the market is still fantastic. Now, for if you're using it to complement your entry bias, you're looking at here when there's a cross of the MACD above the signal line. So we have the MACD line, we have the signal line. Across of MACD line above the signal line, it signifies a potential return of the market. Now, then you have another point here. You now have another point here. When it crosses, is this histogram painting volume that it's actually crossing? So if it's not painting, that's another issue. So then you have this, so above zero. So here, that means while we're even waiting here, this is going to confluence you. Remember what I said, above 200 moving average, but those are not factors you're using. Above 200 moving average and above, right? Above even 50 moving average. That means this is a potential entry, but you want to like maybe work with your MACD to cross above, okay, after this crash. If not, the market should travel down back here, right? So if it's a future trading, you are trading or whatever, now this is the market return and bounce on top of 50 moving average. That means after this engulfing, you should be finding an entry, for instance, for your Bitcoin. So if I find an entry here, that means what we're doing, remember, as if you're a scalper, now you find a trade here, now your stop loss is going to be below that swings that give you the entry. 1:2 risk reward is the high of this. Can you see? So let me do example. Perhaps this gap of this Bitcoin on Forex is so much, but let me just do an example. So let's look at BTC. Okay, so you can see the same thing you can see here. So if I'm going to find an entry, I'll just use 0.01. So I've entered, right? And then if I say, okay, my stop loss, that means my target is here, where I entered from, and then my stop loss is below this point here. So 1:2 risk reward, perhaps I think okay, 1:2 risk reward. Let's look at it. The 1:2 risk reward is there. So you can see my entry price and my stop loss. So, and I'm going to go down and then adjust and set my stop loss. So let's look at it. Stop loss at 118.53. So 118.53, 118.534, okay, 0.51. So it's a $3. So, you know, for just doing an example, and take profit 119, 649, 119, 649 point what? 0.03. So you see that was going to be $7. So I just do an experiment, okay? So now, but ordinarily, maybe if you're waiting for your MACD to cross, you want it to cross, it's already signs of, okay, taking a recovery and all of that. I just have to do this so that you can see. Now, what happened if the market refuses and then crash down and you're going to lose $3 or something, right? So that's what's happening here. But remember what I said, ordinarily, this market, if all things being equal, because why? It has some liquidity to be grabbed below, and of course, liquidity to continue trading above. Okay, so if that's the case, if we look at it this way, that means the potential of this market can return back to this point. Why? Because there is a gap here. That's what we call an imbalance. So there is a gap here. so that the market could come back to fill. And then if you come to fill that, so if you enter, for instance, and it stopped you out, now you are reinforcing back that after this, and it got a bounce at this top, you are finding an entry, or break below this and now reject. That means you want to be selling. At that point, you now take short and then probably find entry, your stop loss above, and then 1:2 risk reward, depending, or you are trailing to see that the market sweep all of this liquidity down to this entry zone. And that's now the dynamics of trading is that you are not static, because you are calculating based on probability and you take the higher probability. That's exactly what you do. Now, I should be in gold, but of course, I was busy doing something. So look at it. Should be in gold. Now, fantastic. This is exactly what I saw on gold, right? Now, it's not a casting stone. So if you look at gold now, for instance, so let's enable just your momentum. Unfortunately, gold have been sideways for some time, so don't get it twisted. So it have been sideways. So now let me take out your trend, because gold had been sideways on a higher time frame. You are not going to see trending as such. Now, if you look at this, what I did here is that I mark all of these points as resistance point. They were resistance point. Now, what I want is the market probably, if you return back here, will reject again. So let's watch what happens. Or else, if we break and we test above this point, you now want to be buying. Now, so this is the lovely thing about gold. It has a very fantastic volume. So if you're looking at your MACD, what MACD can do for you again now is that I said, when there's a cross of MACD line above the signal line, that's a signal potential buy. But look at something very, 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 very fantastic here. This is 5-minute time frame. Perhaps you have done your 1 hour time frame and check overall. Now, when you are trading with 5 minutes, I will tell you to check your support and resistance on a regular time. Now, here, this is what happened. When the market crashed down here, this is what I do, Felix. I mark from the wick of the candle to the body, and I stretch it out. For instance, here. So what you want is for the market to return back here. All right. Number one, return back here, bounce. And then if it bounce, look at what gave birth to this. So you want it to cross this point, and you are looking for an entry. Number two, you want it to cross below here and immediately return back to the zone. Then you want to find an entry. Number three, not even getting back to this point and then failed, you are looking for an entry. But in this case, massive dump, that means this is no longer valid. So which one will be valid? There's a new one here. Look at it here. So this is a support, right? So now the market come back here. So you want the next reaction by the market, move up very massively. Here you have this. And then what happened? It broke, sweep. This is sweep of liquidity. And the next thing you have is that the market return back to the zone. Now, returning back to the zone here, it means you are fine to find an entry, right? So sometime with engulfing candle, or depending on the type of candle that actually react, if it's an engulfing candle or maybe a pin bar, whatever, then just want to find that the market return back to the zone properly and then close inside the zone. Okay, so now just like this. Now look at this here. For instance, the market broke here, it didn't close inside the zone. Look at it, bearish market, but this is an engulfing. And then so some people, sniper entry trader, they are going to find an entry as the market closes. This engulfing close is their entry. So perhaps their stop loss is below here, 1:2 risk reward. Now, why some, I never knew that it was even so fast. But why some person will be wary here, because it's close to a support, a resistance, and all of that. So 1:2 risk rewards already 20 pips or 22 pips to 47 or 44 pips, as it were. Now, this is 5-minute scalping strategy. If you look at it here, this is a resistance, market travel back here, and then you are looking for another rejection. Now, so if you go back to use and then just enable your MACD, you can see your MACD cross is exactly where you have actually, where you have actually trail and, refine your entry to be. That's where your MACD has actually given to you. So scalping is a lot easier with assets that have good liquidity. Guys, can you see what I said here? Now, excuse me. So the market probably could return back here. If you return there, you want to find an entry. If it does not, no problem. So if this is your stop loss, it's a scalp. But if you are doing major trade, this is too small compared to what you ought to have. Okay. So that is good. And that's how you trade using all of these indicators. But you are not depending on indicators, so you need to understand the price action. But first of all, you need to identify where is the market coming from and where is the market going to. So sometimes I look at people, they enter the market and they are so sure, okay? They are so sure there's a kind of sortie they have given that this market must react like this. No, you have to think both sides, two sides of the coin for your market. So market could either go left or right, and it depends on what energy that supplies. If it is sell supply more energy, it will change the direction of the sell and go for buy, right? So if it's the buy that shows more energy, sorry, it will show the same way as it were. So that's why when you are trading, you just need to be meticulous. Now, another thing that's going to help you is that you don't trade too many instruments at a time and just have few. So, especially if you're a beginner, the first thing I recommend is Euro USD as currency. The next is GBP, USD JPY, then add Togo. Three things. Then other things you can be learning it later after to know how to navigate, take advantage of them as they present themselves. So there are so many strategies I use, but I love it to be very simple, straightforward, and then so that you can be profitable. Okay. So, but if you complicate things so much, it's going to be an issue. But sometimes when you have 2, 3 instruments in the array, you work on one that is going to be more easy to move with, and then you now begin to trade that one. But if you want to trade everything at a go, you want to trade US 30, you want to pay gold, you want to trade NAS, and all of that, it's going to be worrisome. And then it will distract you. You barely will not even profitable in any. Okay. So, ladies and gentlemen, that's the thing. So look at oil. Actually, this is oil. I trade oil a lot. If I come here, oil have been choppy for some time too, right? So if you look at it, you see that oil was actually choppy. But if you extend, you know now that, okay, oil is in a downtrend. So if it's in a downtrend, so very simple thing, if this guy was in a downtrend, so I don't need to struggle myself. So I will be walking towards the down move of the market. So because this is a downtrend, so this is a low, a swing, and another swing. So you identify it. Now by the time you go to your lower time frame, right? You go to like 4 hours, okay? You're going to identify other basic features or areas or pivot point that you want to mark when the market come there. Then you want to identify buy or sell. Now, if you look at this market, when you use trend line, maybe moving average, it may deceive you because it's actually not trending. So what is it going to give to you? So you can be confused the way the market will move around all of this. So where will you now enter the market from and all of that? That's why knowing basic things about the price action is very, very important. So if you go to 15 minutes, so perhaps on 15 minutes, you are biased, right? That the market is a downtrend. Okay. So for that, when you see the market, okay, already crosses below 50 moving average and all of that, you want to be selling. So every opportunity that hit back to 50 moving average is a selling chance for you. That's the thing. You go to 5 minutes, the same thing is going to present to you. You're going to see literally, right? So sometimes the market gets you more confused. In 5 minutes, 15 minutes may be better for you. Okay, so look at 15 minutes looking more better and easy to spot chances of entry and all of that. Crosses 50 moving average, but get rejected at 200 moving average. So you are selling and you are looking for immediate swing low or swing high, depending on what market you enter. If it's a buy or a sell, and all of that. So that's one of the things we encourage people to settle down on learn. And so it's going to be very beneficial for you if you settle down to understand all of those things. And then that's going to be good. So you can see what I said. This guy should travel down back to this point and then bounce from there. Once you bounce, then you want to be buying. But if you didn't bounce and create a scrub down, then you want to be selling. Because if you look at your MACD potentially, so you will have sold this market when it crosses here. But in selling, you are still conscious about the zero line because it can get to that zero line, find its way back up and all of that. Okay, so that's the basic thing I just want to show to you in this video. I know very, very many persons are struggling with the market, but if you can take it as simple as possible, then you achieve greater results. But if you are if you complicate the whole thing, trying to get this, trying to learn this, trying to understand it, trying to understand this concept and all of that, I can tell you, you're going to be running around and achieve no result as ought to be. Okay, so you want to learn more. So what you need, you're not paying me any money. So all you need is to register on Capital Extend, fund your account appropriately. If you want to get on what you need to do and all of that, funny enough, we have different scanners that help us to scan the market with ease. So if you want to be part of the ecosystem to trade and make money, have signals, then you can chat with this WhatsApp number +234 90470 44998 +234 90470 44998. So you can inbox on WhatsApp so that you can be put through what you need to do to achieve what you're looking for, right? It's very simple. We have different scanners that can help you to identify potential entry and exit and all of that. Look at when it says sell here, look at when it says buy here, and all of that. So these are the advantages you are going to benefit coming into our ecosystem. You can see this already saying sell, right? So if you look at what I said, it's going to sell down to that point of entry and probably before you can find another. So look at gold, say buy. Okay, check another instrument, it's going to show you. Okay, here, this buy here, move up here. Okay, so look at the sell here. Look at the sell here. Look at the sell here. Okay, look at the sell here. Look at the sell. Look at the sell. Right? Look at the sell. Look at the sell and a buy. Look at the sell straight down. So like a double top. This is oil. Come on, this is massive. The gold, a sell, a buy, a sell. Okay, no buy yet. So this is it. And so you want to benefit from all of this. You don't need to pay. You just need to follow instruction and then register, fund your account, and then you can follow our signals and updates and be profitable. So that's just what it is. So many opportunities. Lie down, follow, but not many persons actually leverage or take advantage of them as suspected. All right, so thank you very much. Go and implement your knowledge.